Let's get one top analyst take right now who last night said, what happened? Stacy Rasgon is managing director and senior semi-analyst at Bernstein Research. You've got a market perform $36 price target. But Stacy, I just want to make sure everyone's understanding. There's some stocks that are more emblematic, right? NVIDIA tells us a lot about the AI trade. I'm not sure if Intel is telling us anything other than what's going on with Intel, which right now seems to be, like, to your question, why is there all this inventory, but it's not getting anywhere? What's going on with the foundry?
Yeah.
In other words, all these kind of company-specific challenges. Is that right?
Yeah. Yeah, and to be clear about it, I'm not frustrated. Like, I don't know why you would say that. Yeah, it was. So yeah, I think Christina set it up pretty. They are kind of stuck, right? You know, they absolutely got caught flat-footed, and it's a shame because, again, as I said on the call last night, they have their own factories. Like, in theory, they could have been incredibly well positioned to capitalize on what seems to be a very strong demand environment, but they just weren't there. And in fact, it was quite the opposite. They were actually scrapping equipment 2 quarters ago. And on the July call, they took an $800 million charge for basically like accelerated depreciation on older equipment that they couldn't find reuse for. So they were selling that off for pennies on the dollar. And clearly, you know, they weren't doing that because they expected demand. And I get it. It's hard to forecast demand. Like it is, I understand. And it's easy for me to sit here and opine. But at the same time, it's kind of their job to do it. And they clearly messed up. Like somebody messed up big time. And so now we're in the situation. And to be fair on the stock, whether you got to remember, it was here a week ago also. So
totally, some
of the decline we're seeing is just the stock probably shouldn't have been $55 going into the print yesterday either. So I mean,
still
some of it's just
at
giving it back.
An 82 multiple.
Yeah, well, you know, earnings multiples on this stock right now are probably not as meaningful because the hope, if you're owning it, is that earnings number is going to go up a lot as they get scale. And like that's the thing. So you look at where they are now. You know, the positives are there is strong demand. And so if they can relax, you know, ease the supply, like they can maybe capitalize it. And they did launch 18A and it's ramping. And Panther Lake, which is the client product on that, looks good. And, you know, he talked about increased engagement on 14A, and so which is the next process. And that's all fine. But at the same time, like there's a lot of hair on each of those. So this demand is good, but they can't capitalize. 18A is ramping, but it doesn't look like the yields on that process are ramping any faster than they thought. Again, I think expectations got you know, really ahead of themselves in terms of what we might hear for customers for 14A. And even if we do get them, they're not going to see revenue for years. Like this is still a massive turnaround story that got way out over its skis on vibes and tweets. You know, it was up 47% in the last 3 weeks on basically nothing. And it's going to give some of it back to today, and deservedly so. It shouldn't have been there in the first place.
I mean, Stacy, the stock is down 18%, and yet it's still a more than double over the course of the past 12 months.
Yeah.
Now, the reason you mentioned social media, the reason why this is interesting is because you got a decent amount of social media noteworthy response and comments because of the question that you posed to management during the analyst call. And I'll simplify it. You just asked what happened in a very skeptical tone. So we know what happened. We know what the response was. We see the stock reaction today. What needs to happen in order for this story to become a more longevity-based turnaround story that actually has legs and gets us back to those all-time highs that are something like $70 split adjusted from the dot-com era?
Yeah. Sure. And I will say, like, the CEO, Lip-Bu, I think Lip-Bu's doing the right things, right? So what did he do? He got the cost structure in place, whereas, like, Pat Gelsinger was, like, hiring like crazy, like, into a vacuum. He had to get rid of all those people. So Lip-Bu's getting the cost structure in place, simplifying the organization, bringing talent in, you know, giving customers what they want. You have to remember, like, he knows how to run a foundry. Like, he was one of the founders of SMIC, and he was on the board there for 20 years. And he ran Cadence, who's an EDA company. He knows the ecosystem. He's got a bunch of startups that are all customers of TSMC. So he knows what customers want. So he's putting that customer mindset in place, which is really important. And he's also trying to under-promise and over-deliver, which is the opposite of what Gelsinger was doing. So those are all good things. At the same time, it's going to be a slog. And I think I've said here before, like, it took 10 years to break it. It's probably going to take 10 years to fix it. That would be like the end of the decade. So he's doing the right things. We'll see if the demand is there. Clearly, they have to get the process technology and everything on par and attract customers. And maybe they can do it. Maybe they can't. Like, I don't know. He's doing what he needs to do at least to get them along that path. But we're not going to really know if this turnaround is valid or not for years. remember, I think he may have even said this on the call. It's a battleship, right? It doesn't turn quickly. It's going to be a slog.